Hey guys, what's going on? My name's Adam, and thank you for joining me today. So today we're going to do something a little bit different. We're going to be talking about four stocks that are under $20, so pretty cheap, and all of them are small to mid cap stocks that I believe are fantastic buys for the next couple of years to come. All with different reasons. Some have amazing, insane growth potential, like 100% for the incoming years, and others are more sort of speculative plays, right? So we're going to get right into it. The first one is NIO. This is a stock that's $19 right now, and it has had an insane run up even in the past month. As you can see here, like 37%. Past 6 months, even more crazy, from like a $3 stock up 603% for 6 months. But I still do believe that this could be a great play in the future. So right now the market cap is valued at $26.4 billion dollars. And okay, so NIO is a luxury Chinese EV maker with pretty much right now three models on sale, right, and is a darling by Wall Street firms. Okay, so this article right here saying how Bridgewater Associates, which is the world's largest hedge funds, owns NIO stock. Now they owned it for quite some time, and they already have had a pretty big run up. And of course, if you don't know what who Ray Dalio is, who is pretty much who runs Bridgewater Associates, pretty much read up on him, and he's one of the most famous investors in the 21st century. Anyways, so as of June 30, the Bridgewater Fund had seen that they do have holdings of NIO, and right now it's valued at 6.6 billion, at least in NIO shares. And as we can see here, there's evidence here. And so pretty much the 856,000 shares, now worth 17 million as of Thursday's close. It means that there's no change in, if there is no change in Bridgewater's holding in NIO, the fund has seen a 150% gain in the holdings, right? So of course, NIO has had a run up of its share price, and of course it is, somewhat overvalued when we're talking about, the run up that it's had. But at the same time, the reason for this is the prospects for NIO in the future, right? So if we can see here in this bolded line, the revenue growth is expected for the current quarter to be 138%, which is insane. For the next quarter, it's supposed to be 83% revenue growth. And for current year 2020 is supposed to be 96% revenue growth, and next year 72% revenue growth, right? So just like an insane number when we just look at the revenue growth for NIO. And NIO right now is not profitable. But as we can see here, so when we look at the quarterly rate, though, we see that they lost, if we look at the operating income, they lost negative 2.8, close to 3 billion 3 quarters ago. So in Q4 2019, right here. And in the first quarter of 2020, they decreased their losses, as we can see, to negative 1.5 billion. And then again, from negative 1.5 billion to negative 1.1 billion in the second quarter of 2020. So this just tells me that although they're still losing money, they're not losing as much money as they did 3 quarters ago, right? So that's definitely something that I like to see. And of course, with the revenue growth also increasing, at least from quarter over quarter here, we can see from previous quarter to this quarter, they went from like 1.3 in revenue to 3.7 billion in revenue, right? Which is just insane. And if we look at this chart right here, we can see annually. So this was just quarterly, and if we look at their annual earnings, we can see that in 2016 they produced, and 2017 pretty much zero revenue, and finally in 2018 they increased their revenue right here around 5 billion, but they lost like over $20 billion in 2018, and then in 2019 they again increased their revenue. This is around probably like 7.5 billion, and they also saw, although they still lost money, they lost money at a slower rate, right? So going from like over 20 billion and losing money to now looks like around like 10 billion in losses, right? So this is definitely something that I like to see, and it's an incredibly high growth company. And I'm definitely just starting to look into this stock, and I like that large hedge funds are owning the stock, and I like the growth prospects, as we said here, like 96% for the current year and 72% revenue growth for the next year, right? And I mean, EVs right now are the hot topic right now. Obviously, Tesla is the biggest name, but I do believe that companies that already have these intellectual properties and also play in a different setting, so it's a Chinese EV maker, I think that definitely could be potentially beneficial and could capture a larger market share in America as well as, of course, in Asian countries. Okay, so the second stock right here is JWN or Nordstrom. Now, of course, this is a stock that has just been, used to be once like a $75 stock. Right now, it's valued at 14.48, valued at market cap of 2.3 billion, and it's just crazy, right? So, when it was around $75 a share, it decreased. Their share price dropped by like 80%, and now it's just trading at like $14 a share. Right? They used to pay a pretty nice dividend of around 10%. They don't pay that anymore. And if we look at like the 6 month price, and sorry, the year to date, how they were affected by the pandemic, they used to be around $40. Of course, pandemic hit pretty hard, and they dropped an insane amount of money, and has stayed relatively stable since then, right? So still incredibly down over the year due to the pandemic, but I do believe that once the economy opens up again, they're going to be able to grow revenues at an insane rate. And this is Nordstrom. It caters towards sort of the upper to middle class, except for Nordstrom Rack. So Nordstrom itself, it's a department chain store. That again caters to upper middle class, but then Nordstrom Rack caters to sort of more like the general population, and has deals. Everyone loves a deal, right? So I own Nordstrom. I don't own NIO, but pretty much the reason why I like Nordstrom right now is, of course, I believe that is undervalued and it's a good value play. NIO is definitely more of like a growth play. But we look at the quarterly results right here. So of course, no one was going shopping in Q2 of 2020, and they lost quite a bit of money. But we can already see an improvement from negative 521 million in earnings from second quarter to third quarter negative 255 million in earnings. Okay, so it does show me with revenue relatively stable. It shows me that they're still losing money, but not as much as they were previously, right? And so if we look at growth estimates, as we can see for the current year, they're expected to have negative revenue growth, of course, because everything is shut down. People can't go on into the stores. So negative 28%. But then next year, it's expected the revenue growth to go 22%, right? So, and I mean, a lot of people compare or group Nordstrom with Macy's, Kohl's, etc. But I don't think that's fair. One, because Macy's is just like a large, huge, department chain that doesn't necessarily cater to, one type of consumer. It caters, well, more towards like the lower end of the consumer chain. And I do think that, even at least when we compare stats, they're expected to do even worse growth. So negative 31 as compared to negative 28. And then the following year, they're expected to do 21% as compared to 22% for Nordstrom, right? So I just think that, because Nordstrom caters to a very specific, middle to upper class, and they have a separate store, the Rack, that caters to the other classes, then this means that, Macy's, who caters more just towards the general population, they won't be able to get to profitability as fast as Nordstrom, right? So the next stock I want to discuss is a more spec play, and the reason why I do like this stock itself is because I believe that gold is going to do very well in the future, and this is an Ontario-based company, Yamana Gold. Right now, the price is $6.12, 5.8 billion market cap, and what I believe of the bull thesis for gold is that pretty much physical gold has already hit a new nominal high of 2020 of more than 2,000 an ounce, and it's currently just trading above or below a couple dollars as of pretty much the middle of September, right? And so this could just be the beginning. If you don't know, of course, Warren Buffett just added to he started a position in Barrick Gold, which is a gold mining company as well. And so when he's betting on gold, or at least the people under his steam are, because he only bet like I think 500 million, which is like peanuts to him. It still shows you that you should pay attention, right? I don't own Yamana Gold. I own Kirkland Lake, but this is just a stock that's under $6 that sort of has the same sort of business model, right? So the reason why is, on the one hand, gold is benefiting from historically low global bond yields. So last year we saw a peak of 17 trillion in global debt at a negative yield. Even though yields have bounced a tad, income-seeking investors are finding slim pickings when it comes to guaranteed income that'll outpace inflation, right? And so an inflation-beating yield is what would drive investors away from gold. But when the opposite is true, we expect to see investors flock to gold and use it as a store of wealth, right? As well, since the dollar and the gold have an inverse relationship, we would expect to see sharply higher gold prices as the Fed continues its assault on the dollar by pumping money into the economy, right? And so, again, I own shares of Kirkland Lake just because they are low-cost, high-efficiency mines that they own. And pretty much they have all-in sustaining cost of 763 an ounce. Based on the current recent price of gold, Kirkland Lake should be generating a cash operating margin of close to 1,200 per ounce, which is just, absolutely insane. And it also has 537 million in cash and no debt. But of course, this is Yamana Gold, similar play, and we can see if we look at the annual growth, they finally became profitable in 2019, where they earned 225 million in cash against a revenue of 1.6 billion, right? And that should just increase their profit should just increase as the price of gold increases, right? So again, and a standard dividend of like around 1% for gold mining companies. So yeah, that's why I like Yamana Gold, and this is probably going to be a more speculative play. It definitely has more upside potential than Kirkland Lake, but again, it is more spec, and it is under $20. So that's why I included it there. And lastly, one company that is involved in the MJ space that I also own is, of course, Planet 13 Holdings. It's based out in Nevada right now, pretty small market cap, but it has run up quite a bit, even in like the past 6 months. It used to be like less than $1, and now it's over 300% gain to $3. And it still has negative earnings, as we can see here. But just look at this chart here, right? So they increased their revenue growth from like basically nothing to all the way to like 66 million, I believe, in 2019, right? And I mean, this year is supposed to be insane for them in terms of revenue growth, right? Despite the pandemic, right? So of course, they're just one of the first companies involved in the MJ space, but they cater towards more of like a classy population of MJ smokers. So they have like haha candies, one that puts you to sleep. I forgot what it's called, but sort of like cater towards more refined tastes in MJ, and of course one of the first plays of MJ in the States, right? And of course, with legalization, I think that's just going to be inevitable, especially with if Biden gets president. Maybe there'll be some run up on that. But as we can see here, we can see that they're expected this year, despite the pandemic, to grow sales of 2.1%. I expect it to be more than that. But next year, as we can see, revenue growth of 116%, which is just incredible, right? So maybe even turn to profitability next year, right? And I believe this estimate was even revised from like 100% or something to 116%. So just, I think this is going to be a revenue beast for years to come. And they're also opening more chains in different states, right? Or I believe maybe in the same states as well. So overall, I suggest strongly looking into NIO, JWN, or Nordstrom. Yamana Gold, and Planet 13. And so, again, this is just my advice. Please do your own research before picking any stocks. I just think that these are good plays given the current situation that we're in. And if you did enjoy this video, please give it a like and make sure to subscribe. And I hope you guys have a fantastic day.